Marketing. We appreciate you making the time available to spend some time here this morning with us and talk about the balanced critical illness product from Assurity. We're mostly going to concentrate today on the simplified issue and some of the very distinct things that you can make use of within the framework of that product. So, Assurity Life. I'm not much of a slide reader. You can see the basics here. What you've got is a combination of 3 carriers that came together and started operating under the single name of Assurity back in '07. Most have been around for more than 120 years. Very strong as far as financial ratings, and as you can see, they got a few bucks in the bank and located in Nebraska, which is the home of a lot of the very well-known insurance companies that are out there. A little bit of product history. CI came to be as a result of the frustration of a surgeon in South Africa, a gentleman named Marius Bernard. If you recognize that name, that's because he and his brother Christian did the first human-to-human heart transplant back in the late 60s. One of the things that he began to realize was that in dealing with the follow-up care, the financial stress was inhibiting recovery for folks, and he designed and developed a product that allowed them to not have to be sweated by the consequences of survival. So for once, you don't have a product that was put together under the guise of shameless profiteering. It was actually generated by somebody who understood why it made sense for the clients. The benefits provide your clients the freedom to do the things that they need to do to undergo treatment and save their lives. The last thing you want is for folks to have to pass on an experimental procedure that might work for them that's not approved in this country, or not have the wherewithal to choose an out-of-network doctor. I know from personal experience, a very close friend, his wife was diagnosed with breast cancer, and the go-to surgeon for the procedure she needed to undergo was outside of their network, and that was a $10,000 out-of-pocket cost. But again, when you're fighting to save your life, that's not the kind of thing that you want to have to waive off as a result of financial situations. And it is a cash benefit, and as you can see, that basically means pretty much anything goes. All right? So probably asking yourself why we haven't heard of CI, and it's primarily because it's just in the last relatively short period of time that the need for it has been so obvious and demonstrated in this country. The advances in medical technology and the smarter and better doctors have created a problem, which is what I'm going to call survival with consequences. And the simple truth is, like it says, what in the 90s were life insurance claims are now critical illness claims. Okay. If it seems like you're hearing about it a lot, it's because it's more around you now than it ever has been in the past. Okay, fork in the road, very key concept here. You want to make sure as you're potentially looking at multiple different solutions for your clients that you understand, based on qualifying criteria, medical and financial, that you very clearly understand what the best option is for them before you put those solution cards on the table. Okay, so this is something you'll hear us talk about a lot. So now, very easy way to conduct a CI conversation with a client, and it starts with this very first simple question: who do you know? So think about this amongst yourselves, because we're not in a meeting room, and really think about who you know that has had to deal with cancer or a heart attack, stroke, kidney transplant, a catastrophic illness situation, which includes Alzheimer's disease. Who has had to deal with that? Well, it's obvious in virtually every case that it was unexpected. All right. You start getting your clients to talk about what happened and how old the clients were, etc. That gets them leaning in further. If you think for a second, many times when you look in the obituary section of your local newspaper and you see younger people, you see the words "died unexpectedly after a short illness," this type of thing there, okay? The key words, unexpectedly. You know, the one thing that we know for sure, having been doing this for a while, the answer to this last question here, would extra cash have helped? Very rarely, I can't ever think of an instance where the answer was no. Very rarely is the answer to that question going to be no, all right? But that first question right up there, who do you know? Myself personally lost a brother-in-law to lung cancer in 2008. I have another brother-in-law who's currently battling pancreatic cancer. My mother-in-law had a lobe removed from her lung as a result of a speck about the size of a pencil lead that they found a few years ago. Thankfully, she dealt with it very quickly and has been able to, she had a full recovery. But when you start thinking about it and really just take more than a quick second, you're going to realize that you know people who have been affected by this. That's what makes the conversation so easy to have. And if you will allow the clients to do the talking and just sort of guide it with this question, this framework here, you will have them pretty well leaning in at the end, which makes it a relatively simple thing to pull together. And we'll talk in a minute about making the buying decision for them, making it very, very easy. Okay. Now, the Balanced CI product that we're going to talk about, it's a lump sum benefit upon diagnosis of a covered illness. Okay. It's not based on cost incurred or time lost. It's tax-free, and it does pay in addition to other insurance. Now, why is the paying in addition? Why does it matter? Okay. I'll give you a great example. I had a colleague here, a coworker, who spent basically all of 2012 and all of 2013 battling pancreatic cancer. This individual would drive 300 miles round trip every Monday to undergo or to take part in an experimental treatment protocol at one of our world-class cancer centers in Seattle. Okay. Well, our health insurance covered, you know, all the costs of that, but what it didn't cover was the time away from work, the gas, meals, wear and tear on the vehicle with a 300-mile round trip every week, et cetera. Those are all pieces of the gap that exists between conventional health insurance and you know, our ability to work with it, and that's why it's so important to have something that pays in addition to other insurance. Okay, so now again, we're talking about the simplified product today. You can see the basics here. Because it's simplified issue, you have a lower tier of benefits. It's between a $5,000 lump and a $50,000. But the nice part is the cash, that makes the buying decision easy because the premiums are low, all right? One of the nice things is this product with an issue age between 18 and 64, it doesn't have a benefit reduction at age 65, and it's guaranteed renewable all the way to age 75. And it has a group of 12 illnesses that we'll take a look at in a few minutes here, which are covered, okay? So now, one of the things we talked about in the teaser for this was the leverage that you get and the ability to claim 3 times, okay? And as it says here, if your benefit, the benefit your client chose was $30,000, they could potentially choose or claim once in each of the 3 distinct benefit families. You have the cancer is in the first family, you have cardiovascular in the second, and then the third is under the heading of other, and we'll look more intently at it. But you can see here that they've got the ability to claim 3 different times, which takes a $30,000 benefit and turns it into $90,000 worth of help along the way. Okay. Another way you can work this is that you can use multiple instances to claim within a family. Again, the $30,000 benefit is available, and as you can see here, an combination of angioplasty, bypass surgery, and then a heart attack, you pick up the specific breakdown. Some of these pay at smaller percentages, but within this framework, they got help dealing with 3 distinctly different situations that they had to deal with. Okay, so I talked about the 3 families or categories, and again, cancer. We'll look at that more here in a second. The cardiovascular or heart stroke, and then the other conditions. Now, non-invasive cancer is also known as cancer in situ. That essentially means that it has not metastasized. And as you can see, it's a $25,000 lump sum payout, one shot, okay? The kind of thing that my mother-in-law underwent with the lobe removal and that tiny, tiny speck, that's a great example of cancer in situ. It was localized, they were able to go in and get it, and there wasn't any metastasis. And that's, 25% lump sum, boom, here it is. That's not a bad thing to have to deal with when you're dealing with all the costs of the surgery and the procedure that they're going to use to deal with the situation. All right. Now down below in the other category, you've got advanced Alzheimer's, and there's a very specific definition that we're not going to get into right now. Coma, kidney issues, major burns, organ transplant that is other than heart, and paralysis, which is not as a result of a stroke. Okay, and those things are all paid at 100%. Bypass surgery, as I noted before, and angioplasty are both paid at smaller percentages because they are eminently survivable, and typically the time lost from work is very, very minimal anymore. And as you can see, it was noted below that heart transplant is not covered or not noted down here. That's because it's under the cardiovascular section up here at the top. Okay, this is the full underwriting, so we'll go past that. Now, the return of premium product is a built-in, okay? It's available on the simplified side. If your client dies of any cause, 100% of premiums paid less benefits received are paid to the beneficiary, okay? If you die of a covered illness and meet the criteria, the beneficiaries receive the max benefit less any benefits previously received. So what does that mean? We'll circle back here a couple, oh, I'm going the wrong way. Hang on, let me back up here. I want to go back to the one screen that showed how you can claim within the various families. That's the best way to illustrate this right here. So now, your client has the angioplasty, they have the bypass surgery, and then the heart attack occurs, they die of it, okay? Again, you get the balance of what's available, that $19,500. They would have gotten it anyway, but since they passed away, the beneficiaries get that to deal with whatever it is that they've got to deal with. Again, we will take questions at the end here. We can unmute everybody and spend some time talking. Also available, you have disability waiver premium. I wouldn't spend a lot of time focusing on these riders until you're very, very comfortable with the policy and the conversation that goes with getting that part taken care of. The issue ages on this rider are 18 to 55, and it waives the premium payments if there's a total disability after the age of 60. Okay? Must be continually disabled for 6 months before the benefit is payable, and they'll refund any premium paid during that 6-month period of time. You've got age-graded return of premium. It's a payable rider. Okay. This is the total return of premium paid for the policy and any riders. It's only on the SI policy because it terminates at the age of 75. Okay. Accidental death benefit. Coverage is up to age 70, equal to the base plan death benefit. It's available in increments up to $250K on the full underwriting and on to $50K on the simplified, but it will not exceed the issue amount. So you can't write $75,000 on full underwriting and expect a $250K death benefit. It would be parallel to the base policy amount. Spouse rider available as well, basically tied to the primary clients in terms of the benefit amount, and as you can see, it can exceed the amount purchased by a primary. Truth be told, you're far better off to write them their own individual contract, and the reason for that is the spouse rider. If the primary were to pass away, the spouse rider would terminate when the policy terminates by making sure they have their own policy that's independent of what happens with the other. And the other thing is, if they use up the full benefit of the primary's policy, the policy terminates. With the spouse rider on it, that will go away. If you give them their own individual contract, if something were to happen like that, then they would have, they would be independent of that. There is a child rider available, very low cost at $14 for a $5,000 unit. Same basic covered conditions, Again, it's tied to the primary insured's policy. It's available from 15 days of age up to age 18. At age 18, they'd have to be added on an individual contract. Okay, take a quick look at underwriting here. Simplified Issue, they use a pre-screening checklist which includes knockout conditions and family history questions. These are it's really clear when you see the app. They reserve the right to do a phone interview if necessary, which is automatic if you're doing a telephone sale. There's a height weight chart, and they also use MIB. In rare instances, they'll use an APS. The truth is that the product isn't priced to have the APS involved all the time, so it's a piece that they try to avoid just because it takes a whole lot of time, and there's a cost on it that they don't want to have to bear. Okay, we'll skip full underwriting. So that's pretty much the basics on this. The biggest thing that you can do with this is if you feel like this fits in with what you're doing and your client base, to give us a call. The thing to remember about critical illness, okay, it is the perfect complement and supplement to everything that you're doing. That's never been more true than it is now with everything that's happening with the Affordable Care Act and the changes in health insurance, so we're not going to get into an aside on that. But people are having to take higher deductibles, and they're taking larger copays. Instead of, $500 per person in a family, it's now $1,000, and instead of $1,000 family aggregate, it's now $2,000 or $3,000. And the copay, instead of being 80-20 to 5, is now 80-20 to 10 or 20. And so they've got these gigantic gaps that didn't used to be there. Okay, this will fill those gaps, and it can be done in such a way, it can be priced in such a way that it's a very, very easy decision for people to make. And the big difference here, which separates this from the kinds of things that you might see in a worksite situation where somebody bought a $10,000, is $10,000 is okay, but it probably makes more sense in this day and age to have a 25. You're not going to find a 25 typically in the worksite, what we call the walk-away worksite segment, but you do have the ability of pulling it together here with Assurity. It's also worth noting that the Assurity plan is one of 4 critical illness plans that we have available here. Also in the portfolio, you have Mutual of Omaha, you have American General, and you have Guarantee Trust Life. And if you do anything in the long-term care space at all, Guarantee Trust Life is a great thing to have in your briefcase, because if you get a client who does not medically qualify with the conventional long-term care program, the likelihood is they will medically qualify with GTL. Not so much with the other two, but they will with GTL. We've done dozens of webinars on that product, and we will spend some time talking about it more at a further date. So that said, we're going to go ahead and take a minute here and unmute everybody and open this thing up for questions. Again, if you have not entered in your PIN code, your audio PIN code followed by star, you're not going to be able to ask questions. I would also ask you to be respectful. If you've got a cell phone or something else that might be ringing in the back and you don't have a question, go ahead and hit star 6 to mute yourself. So let's go ahead and open this up and take questions. Okay, well, I'd be glad to make the slides available to any of you folks who are on the webinar right now. You can email me at mike.anderson@whywaim.com. You can always call us here. The number's on your screen in front of you. Again, email me at mike.anderson@whyaim.com, and I'll be glad to get the slides shot over to you. So I'll make one more pass here for questions. If there are none, we will go ahead and close everything up here for the day. Any questions out there? Okay, then we'll hopefully we'll categorize that as a job well done. Appreciate again your time. to sit down with us here and talk a little bit about the Assurity product. We'll be doing additional critical illness webinars pretty much every Friday. We have some critical illness topic that we work with. We will have one on the American General product very soon. Pay attention to the AIM newsletter, which goes out every Friday. It includes our webinar schedule for the next week coming up. Gives you the ability to sign up. So all of that said, we're going to go ahead and shut everything down. Appreciate everybody's time, and we will we'll look to talk to you soon. Thanks, everybody. Bye now.